Hi, welcome. This is Mary Ellen McGonagle with your Daily 5 for Thursday, April 27th. For those of you not familiar, a bit of background. I do have many years of experience both on and with Wall Street. I was a portfolio manager of over $2 billion in assets before I joined William O'Neill and Company. And from there, I worked with top portfolio managers and analysts, advising them on the broader markets, on stock selection. O'Neill's work is all about getting in front of these big winning stocks just as they are poised to take off. That was very, very exciting. From there, I did found my own investment research firm, MEM Investment Research, which is currently being powered by simplertrading.com. And there I am the author of a top performing twice weekly newsletter, the MEM Edge Report. You can find out more at meminvestmentresearch.com. Use that link below at the end. So first up here, I am going to share with you a view of the broader market indices, and this was recorded after the close on Wednesday, the 26th. And here we can see the S&P 500 is trading lower for the week. It's down about 1.9% into Wednesday's close, and we can see high volume taking shape there. So the markets are under a bit of distribution. Also of note is the relative strength index on this daily chart is now in negative territory. The stochastics have also turned negative. So with that, my near-term outlook for the markets is cautious at best. So these stock ideas that I am sharing with you, I hope you will keep that in mind. We have seen stocks outperform during pullback periods. So let's jump right in and take a look at some of the names that are withstanding this selling and otherwise faring quite well. First up, we're going to take a look at a company that reported earnings late last month, and this is Lululemon, the athletic wear company, LULU, on the daily chart, and take a look. A huge gap up after the company reported not only strong earnings and sales that were above estimates, but also the company guided growth estimates higher going into the remainder of this year. So lots of positive news there. We are continuing to see gaps up with this current earnings season, and you'll want to use this as a guide for what to be on the lookout for to tell you that that gap up has further upside. So let's take a look here. First up is that high volume on that gap up and follow-up day, indicating accumulation. And then the stock from there marks time, in essence, digesting this significant one-day move. Also of note is the fact that that 10-day simple moving average will eventually catch up to the current price action. And then it is from this point forward that you can keep an eye out for a buy point. In essence, the stock has not traded below that gap up. It has retained the gap up in price, which is bullish. So from here, we can see that Lulu did pull back to this upward trending 10-day simple moving average. It experienced a short-lived, longer-term base breakout, but that pullback to that 10-day simple moving average can be viewed as a buy point, your RSI in an uptrend above 50, and likewise with your MACD above 50 in positive territory. Next up, we're going to take a look at another retail stock, and that is Starbucks. SBUX, of course, is the ticker symbol here. And this particular stock is in a very confirmed uptrend, also experiencing a base breakout. Now, of note is the fact that the company is due to report their earnings in 5 days from today. So you do need to know that. Oftentimes it's quite risky to buy a stock right before they report earnings. But let's take a look at this current chart. It did experience a 3-month base breakout, nice high volume here. We can see your momentum with that MACD in positive territory heading higher, likewise with the RSI. So a very positive chart with the stock in an uptrend. They've seen quite a bit in the way of increased sales, a lot in the way of social media and viral drinks that are driving growth. So from here, let's go ahead and pivot a little bit. We're going to take a look at a medical products company, and it's actually located right down the road from where I am. It is Medtronic, MDT. We're looking at a weekly chart, and what I wanted to point out to you are a couple of factors. One is that the stock has broken back above this 40-week, also known as a 200-day moving average on a daily, but we are looking at a weekly chart, also up above that 10-week moving average as well. Again, high volume. You want to see that volume indicating accumulation. The MACD just this week turned positive, trending up above that net neutral zero. And all of this is taking place amid very positive news. The company did last week receive FDA approval of a one-of-a-kind insulin delivery system. It modifies your insulin intake after eating meals, for instance, and it updates every 5 minutes. So sales are expected to be quite strong, and we can see historically when a downtrend reversal takes shape. I'm not saying it will always experience prior price action, but certainly of note, it does have that predisposition. So that is a name there as well. From here, we can pivot back to retail and take a look at a well-known company, and this is Walmart, WMT. This particular stock is known, certainly in my universe, as a recession stock, in the sense it was one of the few stocks that actually was up double digits in 2008 when the broader markets were down over 34%. So let's take a look at the stock at this time. Another base breakout, 5-month base. The longer your base prior to that breakout, historically, the longer your advance out of this base. And we can see the RSI is in positive territory, as is the MACD. Subscribers to my MEM Edge report will be very familiar with this company because it has been on our suggested holdings list since late March. The stock and the company is going through a lot in the way of innovation regarding automation of a lot of their systems, and they are seeing increased foot traffic and online traffic. That just came out last week. So that's another stock for your consideration. And then from here, last up, I'm sharing with you a negative stock, and this is Target for those of you that either short the market or use options. TGT did see a break down below each of its moving averages this week. We can also see that the MACD is now in negative territory. That RSI, which had been trending negatively, remains below that net neutral 50 in negative territory. Target has been having quite a bit of issues in the way of inventory excesses and so forth, and we can see that it is continuing to deteriorate. That's it for today, everyone. I look forward to seeing you at my MEM Edge report, joining my other subscribers. Have a great rest of the week. I'll see you guys soon.